The trade war drama continues. The cat and mouse game of U.S.-Chinese trade negotiations goes on, and I'm not much concerned about whether this is a short-term or a long-term phase one that we're going through. What is more important to me is the performance of the emerging markets and whether or not they present an opportunity. Now, I've been invested in emerging markets for the long term, and let me show you a chart of why. If we bring up a chart of the emerging markets, note here that this starts in November of 2016 when President Trump was elected. The markets went up, nearly skyrocketed from November of 2016 all the way through till January of 2018. At that point, they put in a multi-year high. And so that first, 12 months or so, 14 months from when Trump was elected until he took office and then served his first term was amazing for emerging markets. Now, the rhetoric started to get heated up on tariffs and trade policy, and so we saw emerging markets really collapse through 2018. But if you'll notice on this chart, through this past year, the last 10 months of 2019, the markets have been relatively stable. I would call this a consolidation pattern for emerging markets. And another thing I want to point out is that if you've owned this as long as I have, going back to late 2016, early 2017, and you've been in this throughout the roller coaster ride, as bad as the chart looks, you would see that your total performance, if you include dividends, you're getting about a 6% annual rate of return. So even when you hear of all the global slowdown and the fear of international markets being in recession, even with all that gloom and doom talk, you're still getting a decent rate of return by taking a chance on emerging markets. The reason I think that is so important is that emerging markets tend not to be very stable. They do tend to fluctuate wildly. It's not uncommon for them to be up 30% or more in any one year. And so by being in emerging markets, you're affording yourself the opportunity to hit a home run. And if you look at the way that this chart is consolidating, I would call this support on the EEM at right around $41 a share. We have appeared earlier this summer to put in the lows, and you can argue the chart pattern here, but I would say it could be a declining triangular type pattern, which to my interpretation would mean that this is counter-cyclical, that the bottom has been put in, we're at resistance levels which have been holding for better part of the year, and we're likely to see the emerging markets go up rather than down. The reason that's so important is that just to get back to their highs that were put in back in January of 2018, the emerging markets would have to go up some 23% from where they are right now. And I'm not someone that exclusively relies on charts or technicals. I like to look at things from a fundamental basis as well. And the reason that I'm very encouraged by what I am seeing in the chart, though, is that we're getting a confirmation in what we see with fundamentals. Because right now, the price to earnings ratio, the valuation on emerging markets is right around 13. And if you assume that they can go up from here and possibly get into a reasonable 16 times earnings, which would be still considerably less than the 18 times earnings that we see in U.S. markets. So if they can just get up to a 16 times earnings, which would not be extraordinary, if they can get up to that level, well, the difference between 13 and a 16 price per earnings ratio is exactly 23%. So I think the fundamentals are confirming what we're seeing in the technicals, and then also when you consider the fact that over the last 3 years, over the last 2 years, emerging markets have been underperforming United States stocks by about 8%. If you factor that in, and we get some real exuberance in emerging markets, we could actually see them bounce from here up maybe as much as 30%. Now let me point out one other reason why I remain so optimistic, and it really has to do with the fact that I'm a contrarian investor. Look at this survey that was done last week from the American Institute of Individual Investors. These people are about as negative on the stock market as you can be. And generally, it's been my experience when you have this much pessimism and negative investor sentiment that a bottom, at least a short-term bottom, has been put in and the markets are likely to go up. So, hey, I don't know if that'll happen, but that is my position. You can take it for what it's worth. Come on back for future episodes to see if I'm right. As always, thank you for watching. Until the next episode, this is John Pugliano wishing you the very best returns.